I want to clear up some confusion in this video about the difference between tax evasion and tax avoidance, especially in regards to trusts, because, accountants will talk out of all sides of their mouths, and just pretty much lie. That's how any tax return is done, is just like making up something, by the seat of your pants, basically. But accountants and lawyers are missing the fundamental difference between private and public, statutory and non-statutory. And so the rules in regards to what they would consider tax evasion and avoidance, when it comes to trust, they're talking about their public trust within their domain as a public agent. And public trusts are typically revocable, and so at the end of the day, they're typically shams. They don't really do much to protect you. They just keep you more a slave to the system and add to your big hierarchy of bullshit, typically. So when it comes to tax evasion happens when you're in their system. You're voluntarily trying to hide money and basically not follow one of their many 10,000 rules. And so there's a lot that can go wrong when you're trying all kinds of different strategies, and you need to document everything and just then interpret all of it and have a whole team to do that, and then they rope you in further by making certain things look smart when it's just making you more and more a slave. And that's part of how their code is written. So that's what a public trust is. But when we're talking about a private trust, this is just, this is the idea of avoidance, because avoidance is just following the law as they wrote it and as the law, which is the common law. So when we're trying to avoid taxes, the idea is structure your estate in a way where you don't commit a taxable event in the first place. And even accountants and lawyers admit this. In their strategies, they also do that, but they do it in a way more convoluted way. So with the trust that we have, it's simply a tax-exempt nonprofit. So by law, it can't make a profit, it just receives donations. So any transaction into the trust, it's always a donation. It's always a write-off to whoever did that donation. Not just the grantor or the trustees or the family, it could be anyone. It could be anyone that can donate to this. And by law, when you send money to a 501c3 nonprofit, that's a donation. So it's very clear. And then when money is spent from the trust, that's just a trust expense. Again, by law, it's very clear. Businesses can have expenses. So very simply, you reach a point where you're not incurring any taxable events to begin with. So we're avoiding all tax completely, depending on how your estate is structured. If you're able to really operate out of these trusts entirely. So that's, when we look at the fear around the IRS and all their little rules, and then that's ingrained because, even accountants and lawyers will say, oh no, but trust, blah, 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 blah. And they'll go on with videos that have millions of views and like hundreds of fucking videos on the same exact topic. But they're missing just like the fundamental baseline of what you could be doing, and that's part of how it's designed. It's designed to all the flashy things that appear intelligent. It's designed such that you ignore that, you pay attention to that, and then you ignore the truth that's just hidden right beneath the surface. And it's sort of obvious, in certain ways, once you start uncovering layer after layer, and you're like, oh wow, that's why that is. But that's the difference between avoidance and evasion. And our strategy is completely about following the law, and it's just being smart and strategic about how we structure our estate plans. So I look forward to seeing some of you in the community if you're not already in there. And for those who are in the community, check out the classroom and see the video from the IRS that they admit taxes are voluntary. So what does that mean? That means that depending on how you set up your estate, you can voluntarily opt out. But that's the interesting thing. They're not going to send you a letter and the parade is going to happen, and then, airplanes are going to like fly in circles around you when you actually opt out. Because opting out is not them congratulating you. It's you having the consciousness and the knowledge to act differently than you're acting now. And that's, what this is about. And so I hope that this, quick clarification can help remove some of that fear. Because I know even some of the trustees who signed this, even they have that fear. They ask me these what ifs about the IRS. But these what ifs are never happening. Every day by day, it's just more and more certain that this is the way to just opt out. So, see you guys in the next one.